Hello, everybody, and welcome to episode 1 of season 5 of the 5 Door Media podcast, where we're diving into the future of the cleaning industry through the lens of technology systems and financials and smart business growth. Today's guest is someone who knows the financial side of running a cleaning company better than most, and he's on a mission to help business owners stop guessing with their numbers and start building real profitability. Cristobal Mondragon is a financial educator, speaker, and consultant in specializing in helping cleaning business owners understand cash flow, margins, and the numbers that actually drive growth. He's worked with service pros across the country to shift the way they look at money from just surviving to scaling with confidence. With a background that combines financial expertise and hands-on business experience, Cristobal has become a trusted voice in the home service space, teaching owners just not how to make more money, but how to keep more of it as well, and how to reinvest wisely and build long-term financial stability. In this episode, we're unpacking the biggest financial blind spots that cleaning business owners face, how to create systems that lead to profit, and the mindset shifts that required to treat your business like a true financial engine. Cristobal, welcome to the show. We're thrilled to have you.
Thank you, Drew, for the invitation. Excited to be here and really put some tips for these for you viewers, really, so they can implement right away on their business and they can see results.
I love it. Very cool. So let's dive into it. Let's set the scene. Let's talk about, why do numbers matter? A lot of cleaning business owners, they get into the industry because they're great at the work, but not necessarily great at the finances. What's the biggest financial blind spot you see when you first sit down with a cleaning professional?
Oh, that's an easy one because I see that all the time. Like you said, not knowing the numbers, right? A lot of the cleaners start solo and they make good money when they're doing it by yourself. But the moment you start hiring, and then now you start running, payroll, and then I had to have workers compensation. What happens? They pay everyone, and at the end they look at their bank account and it's nothing left for them as the owner, right? And then they believe like the only solution to this is just to work harder, which is not. Actually, the way to get out of this rat race is taking a step back, write down exactly how much you spend on operations per month. So I'm talking software, marketing, your professional services like your CPA or accountant, um, credit card fees, cell phone, everything. Literally, you need to
Mm,
take the time to write down exactly how much you spend per month, and then the most important part is you need to write down how much you want to pay yourself, right? I see this a lot of times as well when I hear people saying, "Hey, I've been running my operation. I'm sacrificing myself right now. I'm not paying anything as an owner because I'm sacrificing to run, to grow the business." That's a big mistake because if you're not paying yourself, that means you're not charging enough, right?
mm,
And then so make sure that you add your salary, how much you want to make, and then you want to also calculate how much you spend a month in labor, right? Raw labor, whether it's by the hour, by percentage, whatever. And then you want to add your workers' compensation and your payroll tax. Once that you add that and you divide the amount that you come up with, divided by the amount of workable hours, that will give you what is called the break even number, right? That is the number that you need to charge per hour per person in order to break even. You cannot sell anything below that because if you do that, then you're losing money without even knowing. So
mm.
it's very important to come up with the break even number first, but then the business also needs a breathing, right? So it needs to grow. So you need to add, and I recommend at least 25% profit margin minimum, up to 35% more profit margin on top of your break even point. That will give you the suggested or recommended hourly rate that you should be charging. If you do this, whatever job that you get comes your way, is going to able to pay your labor, pay your operation, pay yourself, and still have a profit. And I see a lot of people, just kind of wing it at the pricing, and then they're like, why there's no money left for me? It's because you're not looking at those numbers. So it's super important to take a step back, write this down. You can even use AI to help you with this.
Mm.
What it used to take, I don't know, 2 3 hours, now you can do that in 30 minutes.
I love that. And you're right. So many times, and this is cleaning business industry, this is business as a whole. business owners, a lot of times they wait too long to actually start doing that math problem that you just mentioned, right?
Mhm.
And it's not a hard math problem, it's common sense, right? But why do you think business owners wait so long to start looking at their finances in that way? What's stopping them from like really being intentional about their finances?
I think it all comes to a mindset. I went through it. When I started doing, the clean with my wife, I was blown away how much money we were making, just her and myself and another girl. Um, and then, the more we started growing, I started hiring, and I remember I started noticing that, hey, we used to make more when we were almost working solos. Why is that? But I just thought, okay, we just need to work more. We just need to build more hours.
Yeah.
And it is not, all you're doing is like digging a hole. And the bigger the operation, if you're not making your numbers, if you're at least not breaking even, all you're doing, the more you scale, you're scaling a failure, right? Because you're
Mm.
just digging a deeper hole. And then what happens? You come to realize that you need to increase the prices. But now your mind is going to tell you no, because if I increase my prices, I won't be able to sell my service. And then I won't be able to make sales. So it's just like a mindset, like, you need to treat this like a business. You're in the business of making money, not losing money.
Yeah, it's the difference between you gave yourself a job when you started your solo business compared to like you're building an actual business,
That's
right?
right.
I agree, it's a mindset shift.
Mhm.
Okay, let's get into like what your opinion of like what healthy finances look like. So for a cleaning company, let's say a pretty wide range, maybe doing like 500,000 to $2 million a year. What does a healthy set of financials look like for that type of business? Margins. I know you said like minimum 25% is what you're recommending. What does cash flow look like? What does profit look like? And also like the big question, how much should an owner be paying themselves? Like there's no like book or graph out there that shows you when you're making this much revenue, how much should the owner be making as well? What do you recommend, for that 500,000 to $2 million cleaning business?
That's a great question. So, the 25% profit margin, after you pay everything, labor, taxes, and operations, you end up with about 25% when you're under 500K per month. When you pass that, you go 500 to 2 million, that actual number becomes like 20%, sometimes even 18, because now you're a bigger operation, you have more resources to spend on, like more software, more employees, more virtual assistants, you name it. So I would say after all said and done, you end up with about 20% profit margin year over year. Now let's break down that. Your biggest expense is always going to be your labor, right? And the way that I've been able to really get a hold of my expenses when it comes to labor, it's by paying a percentage base. What in the industry is called pay by performance. So essentially, you
Mm,
pay a percentage to the cleaners, and then and this could work whether you have employees or subcontractors. When you work with subcontractors, you have to pay them a little higher, right? Because they're going to essentially put their supplies and whatnot. But
sure.
in case I have employees, so I pay them 45% commission of every job. And actually, let me go back. It's actually 40%, but it's a sliding scale, and this is to help control the quality of work. When you start paying them by percentage, cleaners tend to rush, right? Because they're not letting pay by the hour, so they're gonna do the job as quickly as possible. But what happens? The quality starts going down.
Mm,
So the way I fix that is by saying, hey, every week we start at 40% commission base. If during that week there's no callbacks, you show up on time, and you always wear your uniform, I will automatically will pay you 45% of all the jobs that you did. So people are more like, okay, yeah, I'll definitely want to make that extra 5%. So I'm gonna try my best not to mess up, not to rush anything, and just be as presentable as possible. When that happens, then they get 45%. Now you still have to account for payroll taxes, which is 7.65%, and your workers' compensation that it varies from state to state. Me being in the state of Washington is about 3%. So it's about another 10%, rounding numbers of payroll tax. So that means I pay it's 45% in pure labor plus 10% on for taxes. So I mean, my labor loaded with taxes is 55% loaded. That's what you should be shooting at if you have employees. Now, if you have contractors, you can pay them about 60% of commission, but now you're not 60% to start and up to 65% if they do a good job, right?
Mhm.
But the good scenario with subcontractors, like you don't have to worry about payroll tax or workers' comp. It's literally you just pay them a commission and then take care of everything. So
And it's pros and cons. Yeah.
exactly. Uh-huh. And so, operation cost, so that's like I said, 55% on labor loaded with taxes, another 25% on operations. So that's 80% right there, right? Between software and subscriptions and whatnot. And you end up and also in your salary as a business owner, and then you end up with about 20% profit margin. Now, to answer the other questions, like how much you should pay yourself, I learned this from my CPA, and it was like mind blowing because, like you said, it's like okay, how much is reasonable, right? Because in the areas
Sure. Yeah.
says okay, it needs to be a reasonable salary. Like, what does that even mean, right? And like one thing is like you can look up. I think it's called salaries.com, and it's a website where you can see how much other uh, you know, business operators pay themselves in the US, and it will give you a range, right? But the way it worked for me is my CPA said, listen, Chris, you need to be able to afford your lifestyle as it is right now. So what you need to do is again, take the time and write down how much you spend in rent, right?
Mm.
Or mortgage, how much you spend on insurance, vehicles, entertainment, food, being, those are the biggest expenses that you have. And you're going to come up with a number, right? So in my case, it was a little bit over 6,700 bucks. So let's say it's $7,000 a month that I need to be able to make in order to pay my living expenses and maintain my quality of life.
Mhm.
That point is like you want to round that up, right? So in this case, I pay myself 8,000 a month uh, every month after month. And so I know that if I pay myself $8,000 a month, I pay everything. I take over all the expenses that I need to take care, and I still have a little bit of left, right? You can pay yourself maybe a little bit more, maybe if the business supports it, by all,
Mhm.
right? Maybe 9K. But the idea is like not to pay yourself too much because the idea is at the end of the year, if you're structured as an S corp, you can take the profits of the of the company as a distribution where you don't have to pay self-employment tax, right? So that's the idea. So not pay too much, but not too little.
Fully makes sense. So there is not a strict just scale or percentage really because every business is different. So it's kind of hard to make it like that, right?
Exactly. It's very
Yeah.
dependent on the person. Yes.
There's a debate or argument that profit margin should be whether the owner's pay should be included in profit margin or not. You're saying the owner's pay should be included in that original expense
Mhm,
category,
mhm.
right? And shouldn't just be taken out when you're looking at profit margin.
Exactly. That's right.
Okay, gotcha. Let's talk into like financial systems or routines. Because like I said at the beginning, a lot of cleaning business owners, they are cleaners, right? They start their business by cleaning themselves. And they're really good at what they do. And then they start to build this thing called a business and they struggle from there.
Mhm,
So they're not really like numbers people, so
mhm.
to say. So, what financial systems or routines do you recommend that every cleaning company owner maybe put in place into their weekly routines, monthly routines? Even if they're not those numbers people, what type of routines or systems should they be following?
For sure. Definitely need to get QuickBooks or what's. I use another one that is called Wave Money. For me, it's actually more simpler to learn and operate than QuickBooks. QuickBooks is a little cumbersome, and so the learning curve is a little
Mm,
long. I like to use Wave apps, and essentially it's the same functionality. And then exactly what I said, I have in my calendar every Monday at 10 a.m. categorize all the transactions from the past week.
got it.
So 10 in the morning, wake up, and I see, okay, yes, that was gasoline, that was marketing, and then I just classified each expense uh, based on whatever category it belongs to. And when I talk to my CPA, all I do is I print out what's called the profit and loss, and it will tell me, okay, this is how much money came, this is how much you spend, and this is the classifications for each, and you end up with this left. So I'll say, choose whatever you're more comfortable with. You can even do this on a spreadsheet if you want, if you don't want to spend money, but definitely take at least 30 minutes every week to go over your numbers from the past week. This way, it will not become an overwhelming amount of transactions.
Listen, pile up. Yeah.
It piles up. You just don't want to do it later. So every Monday, 10 in the morning, I'm still fresh in the mind. I'm grab my cup of coffee, and then I just go click, 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 and then I'm done.
Love it. What are some sneaky expenses that you see cleaning business owners maybe lose track of, or they don't realize how much they're spending on it? What are some sneaky things that you see?
That's a good one because I'm guilty myself. Be be on the lookout for subscriptions, right?
Mm,
This is one of the things also I learned from my CPA. When I got her, I've gone through several CPAs, but the last one was just really good. And she's like, Chris, let's take a look at how much you're spending, right? Go through your bank statement and decide what you don't really need,
mm,
right? And I'm like, oh shoot, let me take a look. And I'm thinking, I knew, like in the back of my mind, I have subscribed to certain softwares that maybe I use once, or maybe I use very sporadically, but I don't think on how much money I'm actually spending on it. So I remember when I did the exercise with her, I ended up finding about $1,000 a month in subscriptions that I didn't even use, software that I subscribed at one point and I totally forgot about it.
mm.
So think about that. That's $1,000 a month. That's $12,000 a year. That's your
100%.
vacation money.
Yeah, 100%. Yeah, sneaky for sure, those subscriptions.
Mhm.
So you're saying for P&L, how often, what should be the rhythm for looking at your P&L?
On a monthly basis.
Monthly
Definitely,
basis?
definitely get used to look what your numbers are. If you're going blind, 2, 3 months, and then you're like, "Where's the money?"
Yeah.
Then that is because you're not keeping an eye on your numbers.
How often should a business owner be looking at things like cash flow?
Or at least every month as well.
Every month?
See, yeah, because it's a weird business. So you sometimes it just goes on up, and then you have some bad months, and so you want to really keep an eye on it. And also, this is a very key important thing: set up a budget. Right?
Mm,
I was guilty of that. What happens? I will see that we're making good sales, blah blah blah, and I'm like, okay, there's money there. I'm gonna spend more on marketing. I'm gonna spend more on and it works, right? Sometimes it's worth to invest more in marketing because at the end of the day, you're gonna generate more calls, more leads that will translate into sales. But sometimes it's a bad month, and then the leads that you get are not gonna be as good. So you end up spending quite a bit of money. You're not making enough sales, and then on the following month, you're like, what happened? You spend more than
mm,
you should have. So definitely stick to a budget, right? For example, I spend about 10% of the gross of the monthly gross on marketing, and you don't want to really spend everything on one channel. You want to diversify. I do Google pay per click, but I also do Google local service ads, a little bit of Facebook ads. I also spend on SEO and call email marketing, right? And that's pretty much it. From time to time, I used to, get maybe a call email from a marketing agency say, hey, we can get you X amount of leads, and then I will get excited and I will spend, I don't know, $2,000 in
mm.
it, and then not see results, and then I will feel it the next month because the sales didn't come in. So I'll
Sure.
say stick to a budget, and then don't touch it, right? Because it's very easy to see money on the bank account and you're like, okay, I got some extra money there. Don't. You stick to the plan.
I love that. And I love that you brought up budgets and marketing because that was actually leading right into my next question. There have been theories, there have been ideas of how much a company should spend on marketing. And like I said, we are a marketing agency, so it makes sense we talk about this a little bit on this
Yeah.
podcast. Um, there are theories that say 10% is if you're like looking to grow aggressively.
Mhm.
Anywhere from like maybe 2 to 4% is like keeping you where you're at to
Mhm.
just deal with attrition and things like that. And then, anywhere from 5 to 7 is a slower growth. Anywhere then like that 8 to 10 is like for more like
Growth.
rapid growth, a lot more leads. Do you find truth in any of those things? Do you find truth in even like those exact measurements that I just talked to? And how do you recommend to one of your cleaning clients that you work with or yourself, how much should be being spent on marketing?
I think you those numbers that you mentioned are right about there. So for me, I always recommend that when you're under 100K a month, you definitely need to be on growth mode, right? So you need to spend as much as you possibly can to feed the engine. Now I'm talking about 10% mostly, right? So your goal is to get to 100K per month. You should be spending close to 10K, right? Because this is going to count also, like you said, attrition, right? We're in a business that we get a new customer and then 2 3 months later cancels, right? You also need to keep an eye on that because it's if you don't fix your attrition rate. For example, there's a client that I was working with, and he's like, "Man, it's been 6 years and I just cannot grow." And I'm like, "Let's take a look at the numbers." And he had like a 10% attrition rate per month. And I'm like, "Dude, do you realize how much is that?" And he's like, "What is that too bad?" I'm like, "That's 10% per month times 12 months. You're losing 120% of your business. So you're literally losing all your
Mm,
customers after the end of the year. That's why you're not growing. So you need to see why they're leaving, right? And then fix that. Because it doesn't matter, you just keep spending money. It's like having a leaky bucket.
yep.
Just keep just losing everything after a certain amount of months. So I would say an average attrition rate that should be because you're gonna have it, right? It's impossible not to lose customers, but you should keep it under 4% monthly attrition rate. If you do this and you keep spending, aggressively on marketing, you will get to 100K a month very fast. Now, what I recommend once that you get to 100, you can do two things. One is optimize what you have. Right now, you have a good sizable operation. You're over $1 million a year now, and you should be optimizing what you have. Um, double down on email marketing. Right, you have now a lot of subscribers, a lot of leads that maybe didn't purchase at one point, but now you have it on your CRM. You can just use that, right? Use text marketing, SMS marketing, um, instead of spending a lot on paid marketing, right? Now you have a good database that you can work. And if you don't have a good database right now, definitely start getting one because that is money. I'm telling you, there is. It's easier. For example, another example. If I have a slow week,
Mhm.
I have a database of about 15,000 people. Now, 15,000 people, it's about 9,000 people is people who actually paid for my service at one point or another. Some of them are active recording cleaners, but the other rest of people, just people who contacted me, got a quote but never purchased. All I do, and I do this every Tuesday around from 3 to 5 p.m. I send an SMS offer saying, "Hey, we got some openings, and I thought of you. You want to make it personalized, right? I thought of you, and listen, you get $50 off on any of our services. I only have eight coupons left. Um, you send this to 100 people. You only need about 10 to 15 replies, and then you fill your calendar, all your spots, right? I had to wait for Google to send me the calls, or still, struggle making the sale. I just contact a list of people I already have,
Mhm.
and I just need a small number for them to take me on the offer, and then I'm good. So I would say definitely start your CRM or your email list as soon as possible. I wish I would have learned, and I wish someone would have told me this earlier, because I didn't have that until year fourth. I remember another cleaning business owner from Fort Collins, Colorado, and she had at the time she was using Infusionsoft, which I don't think exists anymore. But she had an automations to nurture those leads.
Yep.
And I remember I saw like, wow, I want that. And when I implemented that, my sales start growing back again. So definitely get into the use of creating a CRM and work that CRM often.
I love that. Very cool. So the conversation, and we've talked about a lot of it today, just that top line revenue, and a lot of times that is what cleaning business owners are chasing, right? We all want to be seven figures. We all want to hit that million mark because we do know
Mhm,
this industry is very saturated and a very small amount of actual businesses hit that seven-figure mark.
mhm,
However, sometimes we need to realize that it's not all about that top line revenue. You know, a lot of owners are chasing that revenue, but they're ignoring that profit. What's your
mhm.
perspective on balancing growth and profitability in this industry? Because I feel like that's something a lot of people struggle with because there's so much focus on that revenue.
Mhm.
There's not enough focus on the profit.
You hit the nail right on the head, because it's the profit what you should be taking care of, right? I've seen a lot of people that say, hey, I'm making 500K a year, right? Or 600K. But I was like, how much is that a profit? Like next to nothing. Like like the gross number is not really relevant. The number that you should be looking at is how much your EBITDA, right? So how much you end up with. You should definitely always be shooting for 20% profit margin. Look at your numbers every month and see, okay, how much I made, I don't know, 100K a month. And then after paying everyone else, I should be looking at least 20K in my bank account. If that number is not close to that, take a look at why. Where are you spending money? So you can start shaving those extra expenses that maybe they're not helping you to grow, or just call it the necessary expenses, really.
I love that. Are there any financial red flags that you can tell in a cleaning business that maybe they're scaling too fast without the right foundation? Like, what are some things people should be looking out for?
Definitely, you need to know by memory your break even point price. If you don't know that, I'm telling you, you're growing back blindly. Um, for example, there's when I'm doing my coaching sessions, and then I get people, the very first thing they tell me is like, "Oh man, I'm stuck at 50K a month. I just want to scale my company and I want to grow. Tell me what marketing channels I should be focusing on. What is the best one?" And I'm like, "Hold on, Tiger. Let's take a look at first at your numbers, because we cannot scale your business if you're not
Yep.
charging enough, because all you're doing is just scaling a mess, right? And the bigger that mess is, the harder it will be for you to handle it. So first, let's take a look at your how much you're charging, and then we need to know how much is your minimum price that you should be charging, and then your suggested price.
Yep.
And then now you know how much you should be charging or looking to charge. And then if the customer is like hesitant, you can come down a little bit on the price, but just enough that you're not below your break even, right? And if you do this, then we can scale it, because that means that no matter what job you get, it's always gonna be built for profitability
It's not only scale it, but scale it in a healthy way.
in a
You
healthy
know, I
way.
think you said something earlier on this podcast where you're like, you can grow anything, but you could grow it in not a great way, and you're not going to fix issues that are existing here by just growing sales, like in new cash coming in. Like new cash doesn't fix what's broken currently. You have to, find out what's broken, fix that, and then move forward from there.
Oh no, absolutely. That's at mindset. It's everything, right? There's a famous phrase from Henry Ford that I think it reads like, whether you think you can or can't, you're right? And so if you think you cannot grow it, or your mind will tell you the reasons no, you won't be able to scale this, right? So you need to make sure that you believe yourself, right? That's one thing. And the way I did it, and I recommend this, it's kind of silly, and maybe other people don't do this, but having a dream board is
Mm.
very important, right? You have to have a strong why you're doing this, right? In my case, when I remember when I learned this, it's like, okay, why are you doing this? Okay, for me, it was my family, right? I want to better their life. I want to better my life, and I want my kids to have a better chances that I have. So how I'm gonna do that? I'm gonna work hard on the business. And I also learned this from the owner of the car dealer where I used to work. It was the first car dealer that I used to work with. He was the owner was very straight shooter. He was
Mm.
not a nice guy, and I always thought like maybe you're too rough around the edges. But one thing told me, right, and I learned this on, um, you know, So let me go back a little bit, right? So when you're on selling cars, right, you don't get paid by the hour. You get a straight paid commission.
Hmm.
And I was in the mentality of like, oh, I want to help this guy. Yes, you want to help him, right? But you also want to help yourself. And sometimes I'll be too nice. When you're selling cars, you know how much profit margin a vehicle has. You know how much the dealer pay for and how much they're selling it for. So you're gonna get a 25% commission of that margin.
Hmm.
Um, and then me trying to be nice, I will lower the price because I want to help the person, right? And then I know I'm gonna make less. And run, my ex boss was his name is Murphy Russell. So Murphy came out to me. He's like, Chris, you need to stop doing this. He's like, um, you want to be nice or you want to make money? And I'm like, dude, I want to make money. Like, there you
Can we not do both? You know?
go. And then it's true. You can actually be both, but at the end of the day, you want to do is help the person make a decision to buy something they already need. Right. And so I remember I got that, and then it was like stuck in my head. So I started doing the cleaning business. I'm like, you know what? You want to be nice? I want to make money. I want to make money,
Mm.
right? And then I can be nice. So and having a strong why, like every morning I will wake up. I don't have that actually anymore, but when I remember I had my dream board, I'll say, okay, I want my house, I want I want my kids to finish college, and I want money in the bank. I really do. That's my main goal. And when things will get tough or I will hesitate, I will say, okay, what's my why? So your why needs to be very strong, right? Because it will help you push through the low seasons. Because you will run into them. Like business owner is not straight up.
Mhm.
You're gonna do this, right? And so you need to have something that will push you through the bad days, the bad months, and so, like I said, for me, it was the mindset, right? How the mindset, okay, you wanna, oh, maybe you can use the same phrase as Murphy, right? You wanna be nice or you wanna make money?
Yeah. And it's about money, but yes, it's more about, to me, what you would do with the money. Like you said, like,
That's right.
money is a tool, right? Money
Mhm.
helps your kids go to college. Money helps
That's
you
right.
have your dream house. Money helps you have money in the bank. Like you said, your three
Yeah.
goals were, right. The
Yeah.
money is just the tool, but it's the deeper reasons of, like, how would you use the tool if you had it,
Mhm.
right?
That's right.
What advice would you give owners who feel overwhelmed or intimidated by the idea of their business finances? Because it can be a scary thing. Money is a scary thing. Money is a hard topic to discuss. I think the crazy stat of, like, majority of divorces that happen in the United States happen due to finances. It's a scary topic to talk about, let alone with your spouse, but, like, your business partners if you have them. What advice do you
Mhm.
have for people to get over that fear and to start, facing their finances head on?
Well, the sooner the better you decide to do this, the sooner you're gonna get over it. Now, a little tip that I can give you guys, and I've been using this for a while now. Sometimes you think like, okay, this question is maybe a little too silly. I don't want to ask my accountant or my CPA about it. It's probably think I'm crazy or I'm being too cheap or whatever. Look, guys, what you can do, and I have this on my pockets, and I use it all the time when I don't want to use call my CPA. I have the answer right away. Use ChatGPT. Most people nowadays uses it. There is an audiobook. Well, it's a book, but I like the audiobooks because at least when I'm walking, I'm listening to it. There is this book called Tax Free Wealth, and it's written. I don't remember the name of the guy, but it's the CPA from Robert Kiyosaki.
Okay.
I'm pretty sure everybody knows Robert Kiyosaki. So the CPA of him created this tax-free wealth book. It's the best book that you can read as a business owner, and it's right there. I think I'll put this one on top of Profit First or Build to Sell. Because those
Mhm.
are also good books.
Is it
This is
Tom
right.
Wheelwright?
That's right, Todd
Yeah.
Wheelwright. That's
Yeah.
him.
Yep.
Okay, so what you want to do? He has some crazy strategies, all within legal strategies, right? Like there is also a misconception, like, hey, there's like loopholes.
Mhm.
He never talks about loophole. He talks about how to do it the right way and how you can lower your tax. Why I have to say it
Liabilities.
right?
Yeah. Yep.
Liabilities. Exactly. That's the word I'm looking for. So, anyways, what you want to do is go and create a custom chat GPT. And when I say, hey, you're a world class CPA, that knows all the strategies from the book Tax Free Wealth, right, by Tom Real, right? And I want you to be my financial advisor and then give him some details about your business, right? My business is located in Seattle. I'm currently doing 125K a month, sometimes 150K a month. I have employee base, right? I just moved to Atlanta, so I live in Atlanta, but my business. So give as much context as you possibly can to
Hmm.
the custom GPT, and then ask questions to it. You will be amazed how many things you didn't know that now it's applicable right there. You don't have to consult your CPA or anything. It's just right there, a financial advisor in your pocket. I'm telling you,
I love
do
it.
this and take me later.
Well, you're so right, and I think one of the biggest pros of that. Now, I will also say, whatever you find with this ChatGPT CPA, make sure to run it by your actual CPA
A
because,
100%.
right? Yeah.
Yep.
However, I think the question originally was like, what do you do with people who are afraid to approach the topic? And I think a
Mhm,
big reason is they're afraid to actually sit down with a CPA and like show
mhm.
people their finances, show
That's right.
people their books that might be a debacle, and they're ashamed of
Mhm.
it in a way, right?
That's right.
So in this way, it gives you a good stepping stone to use
Mhm,
a robot in a way instead of a real human being when there will be no
mhm,
judgment from that robot. So that's actually a really good tip. However,
mhm.
I will, for liability's sake of my own,
Yeah, yeah.
make sure to don't take full tax
Consult.
advice from a chat GPT. Make sure to go
Yep.
talk to a tax professional in real life after you've got everything straightened, maybe with the help
That's
from
right.
a GPT. Yeah.
100%, my friend.
I
Yes.
love it. Very cool. Last question I have for you. If you had 60 seconds to speak directly to any cleaning business owner who's possibly hustling hard but struggling to make money stick, what would you tell them?
Again, man, it's take a step back to learn your numbers. Uh, Super important. I know it's kind of sounds boring or maybe a little intimidating, but I'm telling you, if you take one day out of your week and say, okay, how much I'm spending and having the doors open of this business, write everything down to the cell phone, everything, write everything down, and then go and use ChatGPT and say, hey, help me calculate my break even point. Once that you know how much you can sell the business, the hourly for without losing money. You feel more confident also when you're selling it. And then you're gonna realize that probably a lot of times you were undercutting yourself a lot, and that's why you were not making money. So if you do this exercise, I promise you, if you do this, at least you're not gonna lose money. You're gonna be at least at the break-even point, and now your job is to increase that a little bit more.
I love it.
And that's what I will say. Take a moment to learn the break-even point, and then go from there.
I love it. Well, Chris Ball, thank you so much for being a part of this conversation today. It's been eye opening for me for sure, and a great way to kick off this new season 5 here on the Five Door Media podcast.
Mhm.
Talking all about money, talking finances for the people in the cleaning business industry. Before we close, what's the best place for listeners to maybe connect with you or learn more about your work?
Yeah. So you can find me on social media at chris.mondragon425. So that's Chris without H. So CRIS.mondragon425. Or go to my personal website, cristobalmondragon.com. Or you can also contact me on my other website, sevenfigurecleaners.com. Number seven, then figurecleaners.com.
Love it. Very cool. And if you found this episode valuable, share it with another cleaning business owner, friend of yours, because if there's one thing I know about this industry is it has one of the best tight knit communities that I've ever experienced with. So maybe you've already had a conversation with a cleaning business owner, friend of yours about finances, about how maybe you're struggling or how they're struggling. Share this episode with them. So you could provide value into them so they can finally take control of their numbers and stop flying blind. Because at the end of the day, revenue is vanity. Profit is
Mhm,
sanity and cash is
mhm.
king. Thanks for listening.
That's right.
We'll see you next time.